So I met with a couple the other day that are just starting their home buying process. And I just asked them, what their time frame was. And they said, well, we're probably going to wait until interest rates come down. I said, okay, but we'll come down to what? And they both kind of looked at each other and they said, well, the husband said, well, I don't know, 6%. And I go, okay, well, do you think when rates come down, and if they do come down to 6%, there's going to be more competition, more buyers out there than there are now? He says, well, yeah, there probably will be. I go, well, there's a study done by the National Association of Realtors that said for every 1% drop in rate, it adds about 5 million eligible buyers to the market. Now, obviously, not all those people are going to be buying a home, of course, but it certainly is going to increase your competition. In kind of a weird way, higher rates are a buyer's best friend because you're going to have less competition. You also might have a little bit more negotiation power with sellers. The other thing you keep in mind, as we've seen in the past, when interest rates do drop, we're going to see those inventories that are already tight just get tighter, going to lead you to less choices and also bidding wars. And we're going to see that upward pressure to increase prices. So is it really, though, does it make sense to buy a home now, or does it make sense to wait? So you may have heard the term marry the home and date the rate. Now, does this really make sense, or is it just like a sales gimmick that the realtors put together to get you to buy a home now versus waiting a year or two down the road? Well, let's look at the numbers and see if it does make sense. So I'm going to use a $1 million purchase price with a 10% down payment and an interest rate at 7%. So our total monthly payment would be $74.54 a month. Now this is including property tax, homeowners insurance, and I'm also factoring in estimated mortgage insurance. Now, if we wait a year, most economists are predicting that home values are going to increase about 4%. So if we wait a year, that home that costs us $1 million today is going to cost us $1,040,000 a year from now. But if we do wait and interest rates drop from 7% to 6%, you're going to be saving yourself, about $325 a month. Looks pretty good, doesn't it? So just kind of going over the numbers again. If we wait a year, the value would only go up about $40,000, but we're going to be saving about $325 a month. Over a year, that's about $3,900. So let's say you do buy now, and the rates do come down to, let's say, 6% next year. Well, you have to factor in that the difference in the monthly payment would be about $3,900, and then the cost to refinance is going to be about $6,000. So your total cost of buying now versus waiting would be about $9,900. Let's call it $10,000. So we're going to take that $40,000 appreciation that you're going to get from buying now versus buying a year from now, but we're going to back out that $3,900 difference in monthly payments and about the $6,000 is going to cost you to refinance. But that still gives you over a $30,000 benefit to buying now versus buying a year or so down the road. The other thing I'd like to mention is that no one knows when interest rates are going to drop. It may be later on this year, it may be next year. So you might be in for a bit of a wait. And as always, you have any questions or want any additional information, always feel free to reach out. And as I mentioned before, this is just for illustration purposes and we're not quoting rates or costs of refinance. Take care.